Hello and welcome to this week's Closing Bell. I'm Callum Newman. As ever, I'm joined by the star of the show, Murray Dawes. And Murray, I wanted to start with the observation that a couple of years ago, you and I used to email each other and go, geez, it's boring. Like nothing is moving on the ASX.
Yep.
Literally today, we could say the theme of the whole thing is it is bullish out there. We seem to have sectors running up all over the place.
Things are flying, aren't they? Yeah.
So we've had lithium rally up, rare earths, defence stocks. Now property stocks are moving. The REITs, the lenders, the mortgage lenders, the non-banks are rumbling up. It just the retailers we were talking about.
Seen,
Temple and Webster, Lavisa, Harvey Norman out with good news results. So you'd have to say that the market is telling us that things are getting better out there.
Yeah, it's flying, isn't it? And you wonder, because everyone's always saying at the moment, it's been rallying too far, the correction's coming, this sort of thing. And I think sometimes when the market's really going, you've just got to not think that you know when it's gone too far and go with it. Because I've got the chart here just quickly to say, here's the S&P 500. And look, here there's where that scare happened in April. And it's just taken off like a rocket. It's broken out to a new all-time high. And I've got that black line there basically saying, look, if it gets below there, I'm a bit wary of a correction. But until then, you've got to let this thing go. It's on its highs and it's breaking out. I mean, why can't it just keep trending into the end of the year like that? It can. So I really don't want to get in its way at the moment. And we've got, obviously, they're looking at lowering rates in the US because we've got bad unemployment. We had the Jackson Hole speech. They've said they're going to do it. We've got Trump wanting to take over the Fed, trying to sack Cook, the governor, and also going to install a yes man next year. I think it's a big risk in that if you've got Trump in control of the Fed, because, he just wants to lower rates so that he can issue massive amounts of debt in the short end and keep his interest costs low and inspire a bull market. Because, what does a president want? It wants interest rates as low as possible to get everything firing. But if he is actually going to gain a bit of control there, market may think he's probably going to do that. And if he does do that, what's going to happen? Maybe he's going to inspire some crazy blast off. And things are powering, as you said, with retail going now in Australia, seeing those good results coming out. So people are feeling a bit flush. And here the interest rates starting to drop. So a bit of more money.
House prices up.
A bit more house prices will start to move. And people, their mortgage payments, everyone's been under the pump, haven't they, for the last few years? That's easing off a bit. So a bit more money can go into Harvey Norman to buy your new washing machine or whatever. So maybe it's a bit freeing up a bit and where things are starting to flow. And, we've picked up on lithium and rare earths, a few months ago saying, look, it looks really good, and managed to jump into a few, thankfully. And we're seeing some really good moves there with, US dollar maybe coming off the boil. Because if Trump's going to lower rates massively, US dollar going down, gold going up, silver going up. And we're seeing that, they're going to have a really strong close in gold and silver this month. If you do a line chart on gold, you'll see that it's actually the highest closing month for gold. So even though it's been going nowhere for 4 months, it's actually getting stronger. And silver looks like it's going to break through $40 soon and take off. I think the US dollar is, watch out, it could actually get really hammered, especially if people are worried about Trump, what he's doing. Mm-hmm. And I'm looking at the yield curve in the US as well. So short rates going down. If Trump really does lower rates massively, does he spark off inflation? And if he's really in control, he's got a yes man in there, does he manage to lean on him not to raise rates even if inflation starts to bubble higher? So then the long end, those 10-year bonds and whatever, they might, the yield on them may actually go up or not down by that much. And so the yield curve will steepen.
Yep.
So that steeper yield curve is something that we need to think about as we look forward over the next year. What if we get a really steep yield curve happening? And you're seeing a sell-off in Japan, in UK. Their long bonds are getting absolutely hammered at the moment as well. So that's something that could spark a bit of a crisis in the UK and Japan if that really keeps going. But that's sort of what's happening for us and for us. Stocks looking pretty good, and there's some opportunities out there, and it's a bit of fun at the moment.
Well, the interesting thing for me is we're saying it's bullish, generally speaking, but there have been landmines. We know that Woolies got hit, Reece, CSL, some of the bigger stocks.
James Hardie. Which was all showing that US property looking a bit
dicey,
because the rates there are still quite high because they're priced off 10-year bonds, they're 30-year mortgages. So that means their mortgages are still really quite high. They're not coming down because the long bond, the 10-year bond yield is actually still quite high, even though everyone thinks the rates are dropping. That's why this interest in the steepening yield curves is interesting, because if that stays high for the 10-year bonds, the mortgage rates over there aren't going to come down. So their property market may continue to struggle, and that's why you've got Reece and James Hardie coming out and saying things aren't going that well over there.
Yeah, so in quotation marks, things are back to normal in the sense of, if a company misses their results, they always get hammered on the day. There's nothing that unusual about that. So those ones are suffering a little bit that we've mentioned. But generally speaking, the smaller sector, the mid-cap sector, is starting to move. And we open up the brokerage, and you're looking, uranium stocks are up 10, 11%.
Yeah.
Straight off the open. And as I was alluding to at the start, a couple of years ago, that kind of thing wasn't happening.
Yeah, well, this is interesting. Well, there's actually news out. Cameco has come out and said just this morning that they're lowering their production. They've got some delays with what they're doing. So from 18 million pounds down to 15 million. So they've cut there. But it's interesting to note that just that was enough to get the whole sector absolutely flying out of the gates this morning. So we'll have a look.
I have a quick squeeze. Just while you're doing that, I'll just mention that, of course, this all goes back to the AI thematic, where we go that the hyperscalers are pouring hundreds of billions of dollars into AI data centers and that one, and they need power. And so the market can see this huge uplift in electricity demand coming, and it's like, well, how are we going to do this? It can be renewables or nuclear or gas or whatever, and it's probably we're going to need them all. So uranium could be a very long-term story out to
I think it is. I think it is, and I've been wearing it, and I've been in it for a while, and it went through that whole last year where it has been terrible. But uranium prices really have started to tick up, because you've also got Gazatomprom. I don't know how you say
Russia?
Their name. They're Russia, but they're Kazakhstan, or where are they?
Oh, I think it is Kazakhstan.
And they're one of the world's biggest, and they lowered their production guidance by 10 or 20%. So that got things going in the uranium price.
And we know there's a big squeeze on supply, right? Because it's been such a dud sector for so long.
Exactly. But it has sort of been in balance, and it's very long-term contracts. So you've got, they're sort of planning ahead years, and so they do these very long-term contracts. So the spot price doesn't really reflect very easily what's going on actually. It's when the long-term contracts start getting done and get done at higher prices, that's when you really know, because the spot price will fly around and it doesn't really reflect the deeper mechanics of what's going on, but things are heading back up. And we've had a year correction, and now it really is starting to rally, gone from $70 to 75, 76.
That's uranium
price. And so, something like this.
That was up at 100 at one point.
Yeah. Well, in the last year, it's had a bad correction over the last year.
But that's commodities, right? that's what they do to you.
Yeah. So I mean, look at the way that Paladin's moved, right? Paladin got up to, $18 just at the start of 2024. That's May 2024.
That's a big correction.
It's off from
that's a big one.
From $18 down to $4. They've had their own problems and that sort of thing as well. But this is where I'm saying the opportunity's coming in, that the correction's over. I think uranium's starting to head up. The fact that Cameco come out and said, we've got a lower production guidance, and the whole sector's really taking off, shows you that things are maybe getting a bit more on the edge of being, getting back to balance, where it's like, if you lose more production, it is actually starting to have an effect. So that's a bit of a good sign. So this has bounced out, and again, you've got the whole wave higher from 2020 up into 2024. You've got a really big correction down to where there's the buy zone of that wave, and it started to turn up. So we're seeing that signs of life, and this is this morning with it really jumping pretty sharply on the back of that news. So you've got that sort of coming in, and all of them are really starting to move like that. What's Bannerman?
Now, let's just throw in the Boss Energy. I'll be blunt here. It shit itself the other day, didn't it?
Yeah,
Remember they
got
marked
belted.
down something. So that's the risk that you're on with these sort of stocks.
Exactly.
where
They've
classic
only got
mining,
one or two mines, and
Yeah.
then something stuffs up, and then they're screwed. But here's Bannerman, which has been a bit not really taking off, been a bit annoying. But Deep Yellow is looking really good. But it looks like it's struggling. It's trying to come alive. You can see it's bounced from 230 to 290 just recently. But that is not performing as well as you'd like it to. It's sort of caught in that range. And you can see, again, the waves, just so that people know, there's that big wave there.
They move in big swings, these ones.
And there's the buy zone there. So it is seeing the buying pressure where you'd want to see it, but the selling pressure coming in, not even able to get up to the sell zone before. So it's really stuck in this range at the moment, but one that is flying, just to give you a sense of some of these projects that will be coming online in the next few years.
Geez, look at that move.
Deep Yellow is finally, and we're in this one. But they've been tough to trade because there's been a hell of a lot of volatility, as you can see there. It's pretty tough trading, but it looks like it's trying to bust through, and I think it's only a matter of time until that one takes off. But you can see that it looks like that uranium sector is actually coming back to life again, and that there is some opportunities there. If we look at
the biggest problem now to me is that there's just so much moving that, which ones do you back? Like you've got
this is where something like the URNM being the Australian one, which is a blend of the biggest producers as well as the smaller ones all around the world. So this one.
So that negates some of that boss, like the boss result.
Yeah, exactly. So they'll be a smaller
caps
percentage.
the upside, I suppose.
But this one's been really nice. We're actually in this. I've been in this for quite a while in Retirement Trader, but that's starting to take off and look pretty good now. If we just have a look at the wave it's been in the last few years, 2023, 2024. So there's your wave structure. You can see the pullback we've had. I mean, I could look at this as like an ABC sort of structure, pulling back into that buy zone there, and then we've got that buy pivot coming in there, right? So that's all working out really well. We've had the big correction over the last year, really shaken a lot of people out, and then the big volume coming in, right, as it's taken off, buying it, and now it's getting close to really taking off. So it's actually looking really good. I think this one, this is what you want to see, is that we're about to see the next leg up. We've had the first leg, we've had the big correction down in the buy zone, and now we want to see it going on that big next leg up. So that's all looking pretty positive to me, and definitely the news coming out. I think India are going to increase their nuclear capacity over the next 20 years by 14 times.
So just a little bit then.
Yeah.
So that's like China, India, which just between them have half the world's population type of thing. So that is a very bullish story, and it could run for years. But
could run for years. Yeah,
the
and it's
volatility
still quite early.
Difficult.
It hasn't really taken off yet, I don't think. So it's
it'd be interesting to go and actually. We should do this actually next week. Maybe handicap where those stocks are in their production, as in most of them are still working towards production, right? So I think Boss was very close to going into production. Then they said, well, we're going to run into some trouble here. And that's why the market really dumped it. But the Deep Yellow, Paladin, they can't be too far away now.
Yeah, Paladin is starting, but
They're already
it takes a year to ramp up.
Yeah.
So and so they're looking at fin 26, 27 sort of is when it'll be at full capacity. But it takes a while for it to get.
So if you go back
really
and think about that big bull run in lithium there for a while, where Pilbara came into production just as the price went skyrocketing, and then they were able to actually cash in on those prices, and that's why it went so bananas.
Yeah,
then of course lithium collapsed, but that's the game.
That's the sort of the game plan that you're thinking about. Yeah, you're definitely looking. If you're looking long term at the thematics that make sense, I think uranium does really stand out, just from the point of view that it is environmentally friendly ultimately. And if the costs of, the solar and wind, and we're finding those wind farms and how difficult it is, and the transmission lines, the cost of those is huge, our energy costs going through the roof, it makes sense that the world might say, well, if we should have a portion, probably uranium, because it is actually environmentally friendly and it's getting safer. SMRs, those new ones are much safer now, and they're getting new technology like Silex technology for the uranium.
You just reminded me that old Trumpy too. He cancelled, I read this, wind farm off the coast of America that was very close to start producing, right? And he just killed the approvals or something. It was screwed over the investors in that project. But then again, that's pushing the market back towards fossil fuels because he's just killed the wind project.
And that's all the costs of it. Everyone's lying about the true costs of it. When you're looking at solar and wind, you've got to add in the transmission lines as well. You can't say, and the backup as well. So you've got to have the backup of the gas. You've got the billions and billions on the transmission lines. You've got the having to create them again 20 years later, knock them down and get rid of them and create new wind farms. And so the cost over time, when you really look at it, it's quite high. And everyone's trying to say solar's free. It's like, it's not in the end.
And then you have AI coming across the top and just like ramping up
massive demand. Yeah, exactly. So
what
those
a
sort
story.
of thematics are a good long-term theme, I think, and that's why I've been building positions. And it just looks to me like it is about to, get going again.
I wonder too if some of that volatility will settle down as those companies get closer to production. Because of course, if you go back a couple of years, investors are like paranoid that the stories, they invest in it, but then, or trying to trade it kind of thing, and then something causes them to get worried and they drop it, and then it goes up, and then the companies, oh no, we're going to take 6 more months, and then they drop it again, But as the cash flows get closer and more secure, they'll, I assume, settle down a little bit if uranium starts to lift as well. So that's a very, very bullish theme. So anyway, it comes back to the point when you're talking about what you're doing in Retirement Trader and now International Stock Trader, which was a big hit for Murray. A lot of people came on board and were pumped for that. So that's really
it was great. We're overwhelmed with the amount.
Is suddenly there's all these different thematics you can start, as we alluded to before, properties moving. The defense stocks have gone bananas. Now commodities are lifting. They had their own bear market, and even some of the juniors now are starting to rally, not just gold. So it's like, you've got to be a part of it, really. You've got to sort of dance where it's raining kind of thing. Yeah,
it's an exciting time. Like I said, with that S&P rally, it's sort of like, well, just let it go. You don't know. We really don't know how high it's going to go. You might say it's overbought and it's expensive and this and that.
Yeah, so talking about International Stock Trader, actually, you've given 3 trades already, right? And they're already up and got one had a good response last night.
One last night it came out with results and is up 10% in the overnight market. Another one was up 8% 2 days after we got in it because of the Jackson Hole speech and lowering rates, getting real estate sort of focused stocks starting to power. So, it's been a good kickoff.
Interesting, there's a guy I follow, I've mentioned him a few times, called Michael Howe, I think it is, at Cross Border Capital, and he's talked how volatility is going down, and that helps the markets because of the way the whole system works. He thinks that the US may be manipulating things to push that down, but as it is, it's lifting the markets, so it's bullish.
At the moment, there's nothing stopping it. And we know at some point the music will stop, and it could be tomorrow. And when a market's like this that's just powering higher, you don't know when that moment's going to be or what's going to cause it. But you're hoping that you've made enough in the kitty that you'll be fine. You'll be wear it. So I'm sort of running positions at the moment. I'm not necessarily buying heaps, like adding a whole new portfolio right now, because there is always that risk that the music can stop. But really, you do not want to get in the way of it and start selling everything because you think it's gone too far. And when you've got no sign of it, you could look back in a year and the market could be up another 50%.
Well, that's just
like that's what could be happening.
We're now August, right? Yeah. What happened last year in August? We had that Japan yield hoo-ha. That's the way to put it. The market sold off for a week or something, and we're like,
watch out, and then. Bang, off it goes.
Up. We went to April, down with the tariff thing, and now everyone's just thrown the tariff thing out the window. It doesn't even really come up anymore. And the market's ripping.
Yeah. So you can't know. You can't tell.
That's risk management, though.
It's risk management, and why do I trust the charts? because I don't really trust what's going on in my head, really, because no one can pick every twist and turn in the market every day. You can't. And sometimes you'll be in tune with the market, and yeah, sure, it's going up, and you're saying to yourself it's bullish, and you think you're a genius because of that. But there's other times when you're just completely wrong, and that's why I trust the charts, because I know that model will get me out quick enough, and it will keep me in when it's really trending. And when it's trending, you've got to let it go, because it can surprise the hell out of you how far it can go. And so you've just got to not get in your own way and just let it run when it's really running.
We were just talking off camera too about some of the retail stocks. If you go back, it's probably a little bit longer now, but I think pre-COVID, maybe 5 years, but Temple & Webster, Lovisa, some of these stocks have just had, for all the conversations that we've had, like with the macro stuff, it's like, if you just back those companies.
I thought they were boring. And I also
easier said than done,
with the high interest rates, I was also sort of going, and retail was getting hammered and that sort of thing. So I sort of left them alone. I haven't got a big exposure. But look at that. Temple & Webster, $5 up to 23 in a straight line. Nick Scali.
Yeah, and we should say that retail sales are probably, if you adjusted for the inflation, immigration, they're probably flat per capita, right? But they've found a niche that they're able to exploit.
Nick Scali.
Nick Scali there. And again,
absolutely flying. Lovisa.
It just goes back to that. I mean, the big sell-off in 23 out of 22 bear market. I mean, you could have picked up a lot of this stuff. And if you can just hold on, like it's been a volatile journey. But that's when you talk about uranium, if you're prepared to back it for 5 years, the results could be amazing.
Yeah.
Or whether it's copper or gold or, but you've just got to hang on really.
Yeah, and when you get a theme like that and you really believe in it, and look, we've all got to take a risk sometimes, and I just try to find those points when it's had a bit of a correction and turns back up. But you really got to, I think, get in there when you get the chance and then hold on for dear life. That's why I de-risk. That's why I take profits, part profits, because then by taking part profit, creating a free call option, I just really can leave it. And I can just say, look, I don't know what's going to happen, but I now am in a situation where I'm going to break even or make money. And so therefore, and my stop loss is miles away from where it's currently, which is what happened in that Uranium. We took part profit on the first rally and my stop loss was miles away, and we've held on to it for the last year and a half because we haven't been stopped out. So our only risk is that we're going to break even on the trade. And in the end, I didn't know that it was going to correct for a year the way that it did. And I was getting a bit nervous down the bottom. But then it's now turned back up and now it's flying again. So did I know all of that was going to happen? Not at all. I just took my chance when it was rallying initially, took the part profit, put the stop loss where we were going to break even, and then just left it. And in the end, we were able to leave it and cope with the big correction. And now it's making great money again. But that wasn't because I'm a genius. That's because the whole model was about knowing that I don't know. And I just want to make sure I put myself in a situation where I can just forget about it and not care what the outcome's going to be.
Yeah, you do need to be patient. That's a big thing, I think. Especially like I bought in a basket of gold juniors about a year ago, 18 months ago. So they've done well, but yeah, I still think they could do so much more. So they're going through a bit of a flat period now. Like it's not quite the screaming gold market it was, but that's all good. I'm sure if we look back in 3 years, it'll be just as good. Now, you did want to mention Weebit Nano.
Yes, well, I was getting
the show.
I was copping a bit of stick on the Weebit Nano hot copper forum.
Yeah,
which is fair enough because I've been talking about it.
They're not happy with your description of its
potential. I said that the odds of success, and when I was talking about the odds of success, like because remember I picked up on this, and I'm actually in this, right?
Yes.
I like it.
You did.
I bought this under $2.
Yes,
and
I remember that.
Watching
you told me when you did it,
and then we came, and then I was talking about it in closing bell here. Once it got through and set off a bit of a signal for me. So I've been saying since 220 that, look, this is looking really good.
Yes.
And we've
highly speculative in one sense.
Highly speculative. Yep. And that's what we were talking about last week. It's had a really good run, but, it's getting close to the point where I'd actually be de-risking because it is still actually in downtrend. So that's what I was saying last week was, look, it's got a really big runway ahead of it of huge opportunity, but if they come out with some good news, it can really
go
massively.
Yes.
Because if the odds are sort of low at the moment of true success, and I said, look, 5-10%, and look, the odds are probably higher than that, let's call it. But what I was saying was the odds are 5-10% of really big success.
Yeah.
So that's like the edge computing taking off like a rocket over the next 5 years, growing at 30 to 40%, which is what some of the predictions are. And all of a sudden, these guys are big players in that market rather than being a bit player. They're, let's say that they are actually a world beater, but they're coming up against some pretty big competition.
Does that have the market cap there? Because I did see that they had their full year report come out. I think they said record
4
revenue.
million.
4 million, right?
And it's 500 million. Exactly.
Is that the $500 million stock, right?
Exactly.
So as a multiple, it's
that's why I was
wild.
saying the odds are still not making lots of money.
Well, it must be bleeding cash.
And it's got these great deals. I know about all the deals that they've got going on. Yeah. The on-semi one recently, it's actually got someone who's putting it into their products. They haven't named them. They're a security firm in the US. And they've got some really great runway now where things can take off. There's no doubt about that. But they may end up as a bit player. And so they might go up another 100% and stay there for the next 5 years and not going anywhere. Yeah. But I'm not in them for that. I'm in them because what if?
Well, it's a long shot.
What if they actually do become not just a bit player, but they really do take off and they're part
or they get bought out from the tech.
They're one of the big players. And edge computing, neuromorphic computing, robotics. Imagine if robotics really takes off and they've got chips in them that they can do what they need to do without having to go to the cloud, and they need the ReRAM in there. So I'm thinking, what are the odds of that? Aren't 60% or 80%. They're low to have everything line up so that this stock could be worth not just $2 billion, but more. Yeah. If everything goes their way, and that's why I said the odds at the moment are probably pretty low of everything going right. But as far as the business actually ticking over, I think the odds are much higher.
Well, it's funny you
success.
mentioned it. I'm just reading a book now it's called Apple in China, I think. Anyway, it's really good, but it goes back to the early days of Apple when Jobs came back, and they at the time, I didn't know this, they had a lot of their production in the US, Ireland, Singapore, and Wales of all places. So it wasn't in China basically. And then suddenly all these tiny little Chinese companies started getting involved with Apple. And of course, over 15 years, their revenue went from 100, 200,000 to 10, 20, 30 billion. And then the Foxconn, that's where Foxconn came from. Anyway, the guy that started it, the Foxconn dude was in a shed when he started. And now he's, God knows what he's worth. So, crazy big things happen when you have those massive addressable markets.
Exactly. And that's why I was just saying that, Leo, if any good news with this, it is sort of set up to surprise. It's already off, 70, 80% in the last few years. And it probably got a bit ahead of itself, of course, when it was up at $8-9. But it's had a hell of a correction. We've got the monthly buy pivots coming there, long-term trend, close to shifting, all out of the major buy zone. So it's sort of just set up, even though it's still trending down, and that's why I'm sort of worried around this area. Is it going to find a bit of resistance? But above that $4, and on some good news, it sort of is set up.
Well, it's the moonshot
to surprise. Yeah. If you're ever going to
go
have
for
a crack,
moonshot,
this is where you want to do it from. So I'm really hopeful that they can come out with the goods.
I'd love to see them do it, actually. It'd be really
It'd be great to see a success story in that space for Australia.
Yeah, absolutely. Well, and Israel.
And Israel,
Don't steal their thunder.
Yeah.
All right, well, we'll leave it there. We'll keep an eye on Weebit Nano. But from our perspective, or your perspective, things are bullish and there's just a plethora of opportunities.
There's quite a bit out there. I'm enjoying myself.
Alrighty, well, if you enjoyed the show, give us a thumbs up. Don't forget, Murray's always happy to chart a particular stock. If you want to drop it, the code or whatever in the comments or feedback, welcome, topics you want to see covered. And of course, we'll keep tracking the length of Murray's beard as we go forward. We'll see you next week.
Bye-bye.